Do you ever find yourself wondering where all your money went at the end of the month? Are you tired of living paycheck to paycheck? Well, you're not alone. Millennials, unlike previous generations, are facing unique financial challenges. But fear not, because in this video, we're going to delve into the top 5 money mistakes you should avoid at all costs. From neglecting an emergency fund to falling for online scams, we'll cover it all. So let's dive in and learn how to secure our financial futures. Number 1. Neglecting an emergency fund. Neglecting to establish an emergency fund is a common pitfall that many millennials fall into. Unlike previous generations who prioritize saving for unexpected expenses, millennials often overlook the importance of having a financial safety net. Instead, they may rely on credit cards or borrowing from friends and family in times of crisis, which can lead to a cycle of debt and financial instability. Experts recommend setting aside 3 to 6 months' worth of living expenses in an emergency fund. This fund serves as a buffer against unforeseen events such as medical emergencies, job loss, or car repairs. By having a readily accessible pool of savings, you can weather financial storms without derailing your long-term financial goals. It's essential to choose a suitable savings vehicle for your emergency fund, such as a high-yield savings account or a money market fund. These options offer liquidity and stability, ensuring that your funds are easily accessible when needed while also earning a modest return. Incorporating automatic transfers into your budgeting routine can help make saving for emergencies a habit. Treat your emergency fund as a non-negotiable expense, just like rent or groceries, and prioritize building it up over time. Remember, emergencies are inevitable, but with foresight and preparation, you can protect yourself from financial hardship and navigate life's unexpected challenges with confidence. Number 2. Ignoring insurance. Insurance is often overlooked by millennials, yet it plays a crucial role in protecting one's financial well-being. Whether it's health insurance, life insurance, or property insurance, these policies provide a safety net in times of uncertainty. However, many millennials fail to recognize the significance of insurance until they're faced with a crisis. Major life events such as purchasing a home, starting a family, or dealing with unexpected medical expenses highlight the importance of having adequate insurance coverage. Without proper insurance, individuals risk financial ruin in the event of an unforeseen circumstance. Understanding the benefits of various insurance policies is key to making informed decisions about your financial future. While insurance may seem complex, taking the time to research and educate yourself on different policy options can pay off in the long run. Investing in insurance not only provides financial protection, but also peace of mind, knowing that you and your loved ones are covered against life's uncertainties. Whether it's protecting your health, securing your assets, or providing for your family's future, insurance offers invaluable security in an unpredictable world. Don't wait until it's too late to invest in insurance. Take proactive steps to assess your insurance needs and secure appropriate coverage to safeguard your financial stability and protect what matters most. Number 3. Not sticking to a budget. One of the most common financial mistakes among millennials is failing to adhere to a budget. Without a clear plan for managing expenses, individuals often find themselves living beyond their means and struggling to achieve their financial goals. Creating and sticking to a budget is essential for gaining control over your finances and making informed spending decisions. Yet, many millennials overlook this crucial step, opting instead to spend impulsively without considering the long-term consequences. A simple way to start budgeting is by tracking your expenses and categorizing them into essential and non-essential spending. This allows you to identify areas where you can cut back and allocate more funds towards savings or debt repayment. Keeping a spending diary or using budgeting apps can help you stay accountable and track your progress towards financial goals. By setting realistic spending limits and avoiding unnecessary purchases, you can take control of your finances and work towards a more secure future. Remember, sticking to a budget doesn't mean depriving yourself of enjoyment. It's about making intentional choices that align with your financial priorities. With discipline and consistency, you can build a solid foundation for financial success and achieve your dreams with confidence. Number 4. Living paycheck to paycheck. Living paycheck to paycheck is a challenging cycle that many millennials find themselves trapped in. This financial pattern occurs when individuals spend all or nearly all of their income on immediate expenses, leaving little to no room for savings or emergencies. According to recent reports, a significant percentage of Indians have minimal savings, indicating the prevalence of this paycheck-to-paycheck lifestyle. Without a financial cushion, individuals are vulnerable to unexpected expenses or income disruptions, which can lead to financial stress and insecurity. Breaking free from the paycheck-to-paycheck cycle requires careful planning and discipline. Start by assessing your current spending habits and identifying areas where you can cut back or reduce expenses. Creating a realistic budget that prioritizes saving and debt repayment is essential for achieving financial stability. Additionally, consider increasing your income through side hustles or career advancement opportunities. Generating additional sources of revenue can provide much-needed breathing room and accelerate your journey towards financial independence. By living below your means, building an emergency fund, and prioritizing long-term financial goals, you can break free from the paycheck-to-paycheck cycle and create a more secure future for yourself and your family. With perseverance and determination, financial freedom is within reach. Number 5. Sharing card details over the phone. Sharing card details over the phone is a risky behavior that can expose individuals to fraud and identity theft. Despite advances in technology and security measures, phone scams remain prevalent, targeting unsuspecting victims with the promise of prizes, donations, or financial assistance. Con artists often use persuasive tactics to coax individuals into divulging their credit card information, claiming to represent legitimate organizations or businesses. However, once obtained, this sensitive information can be used to make unauthorized purchases, drain bank accounts, or commit identity theft. To protect yourself from phone scams, it's essential to exercise caution and skepticism when receiving unsolicited calls requesting personal or financial information. Never provide your credit card number, expiration date, or security code over the phone unless you initiated the call and trust the recipient implicitly. If you receive a suspicious call, hang up immediately and report the incident to the appropriate authorities. Additionally, consider registering your phone number on the National Do Not Call Registry to reduce the likelihood of receiving unwanted telemarketing calls. By remaining vigilant and safeguarding your personal information, you can minimize the risk of falling victim to phone scams and protect your financial security. Remember, it's better to be safe than sorry when it comes to sharing sensitive information over the phone. Mastering your finances requires diligence and discipline. By avoiding these 5 common money mistakes, you can pave the way for a secure financial future. Remember to prioritize savings, invest in insurance, stick to a budget, and safeguard your personal information. With careful planning and prudent decision-making, you can achieve financial stability and peace of mind. Thank you for watching. If you found this video helpful, be sure to like, share, and subscribe for more valuable content on personal finance. And remember, your financial well-being is in your hands. Until then, take care and make wise financial choices.